Hey everyone, how's it going? What what day is it? Saturday. Happy Saturday. Market's closed, right? The perfect time to study. Um, I'm making this video per Nathan's request. Shout out Nathan, guy from Discord. If you are interested in joining the Discord, check out the link in my description. But I'm going to be making this video about ATR. I'm sure there's videos out there, but I think that ATR is actually a pretty good indicator specifically for setting your risk. So I'm going to talk about kind of how I use it and whatnot. But if you're new to trading and don't know what ATR is, ATR is a technical analysis indicator that measures market volatility by decomposing the entire range of an asset price for that period. So if you have a ATR set and like let's say you add an ATR indicator to your chart, whatever charting software you use, um, you could set the period. You could configure it to set the period. And if you had a period of 14, what that would mean is that it's tracking the average range of a candle for 14 candlesticks. Um, and obviously, depending on the time frame your chart is, like say this is a 1 minute chart or a daily chart, like whatever it may be, it's still gonna take those specific candles. So an ATR period of 14, that could be either 14 days if this is a daily chart, or it could be 14 minutes if this is a minute chart. But you can see that like how ATR kind of moves with price. So at times where price is moving down or up fast, it'll go towards the high end of the range of ATR, right? And then on this side, this is the basically cents or pips, whatever it may be, whatever unit you're trading, um, of range. So basically, in the last 14 periods in this chart, um, the average true range, so the range of one candlestick, um, is like 60 pips or 60 cents, whatever it is. Um, so yeah, so that's kind of like how ATR is calculated. So you know that from the top end to the bottom end, the next candle is likely to be within that range. Obviously, anything can happen. Volatility could expand or it could contract, but that's kind of how that works. Here's another example. So you have this period where ATR is high, and then this period where ATR is low. So this is a higher volatility period. You can see the candles and wicks from top to bottom are a lot larger versus here when they are a lot smaller. So you might be wondering, how do I use this when I trade? So I'm gonna pull up Thinkorswim real quick and walk through it. So one thing I like to do is pair ATR with another kind of volatility indicator, Bollinger Band width. Um, if you guys are familiar with Bollinger Bands, it's basically it shows kind of expansion of price and contraction of price, and the width of between the bands indicates what that is, like whether we're in an expansion period or a contraction period. Um, so finding times of high volatility would be when ATR is high and also Bollinger Band width is high. So I trade mean reversion, so I'm looking for those areas of high volatility. I'm looking for um, at the top end of a range for a contraction and snap back to the mean. So more recently, I've noticed that I'm in trades longer than normal. But if we took like a potential entry, like I would likely enter on this area right here where this yellow line is breached. What I would do is look at ATR at this point and see, okay, 17 cents. I don't know if you guys can see down here. But at this candle, it's 17 cents. So from my entry point, I want to risk 17 cents because that is the natural volatility at that point, and I don't want to get wicked out. So doing using like an ATR or half an ATR and then setting your profit target at one ATR or two ATRs below that is kind of how you can manage your risk while also not getting stopped out. So if I, just randomly am like, okay, this price comes here, I'm gonna risk like 5 cents. I could get stopped out pretty easily because the average range is 17 cents. So it's a very tight stop loss. Looking at the past candles and the volatility expansion, you're not kind of adjusting your size based on that and giving the trade room to work out. So that's how I use it. I think I might change the period of my ATR. Right now I use a 5 exponential. For context, exponential is more recent biased, and 5 is the period is means it's only looking at 5 candles to determine that ATR. Um, I might make it less than that. I haven't really decided yet how I kind of go forward. For now, 5 has been working for me. But I kind of want to laser into kind of one candle to be completely honest and focus on the range of just that. The problem with that then is I might be um, risking too little. So yeah. So I haven't really tested playing around with it that much, but that's kind of how I use ATR with my trading. Um, and I use these technical indicators, right, to filter out a lot of trades. But then once I'm ready to trade and I'm taking that position or getting ready to take the position, I'm really focused on, okay, what is price action showing me? And when I'm in the trade, what is price action showing me? Which I'll do a separate video about, specifically candlesticks and volume. So if you like this video, subscribe, stay tuned for that video when it comes out. But yeah, that's ATR in a nutshell, how I use it. I basically use it to determine my profit target and my risk, um, and use other indicators for actually entering the trade. So yeah, thanks for watching. Hope you enjoyed. Leave a comment if you have any questions. Join the Discord. I'm pretty active in there and I post resources. So if you're interested, check that out. Link in the description. And peace.